Today, what I will be speaking about is market phases, so accumulation and distribution, and how market makers are actually creating these phases to actually be able to trade the market in the first place. Now, if you're new to the channel, I'm a top author on the TradingView platform, and every single day I share a lot of free analysis and education on all my platforms. So I really do suggest that you subscribe to the channel so you won't miss out on all this free education, and I will see you in the video. What I want to explain into this video is one of the most important concepts when it comes to market phases in general and how the market actually moves. Now, you might have seen this pattern very often. What the market does. The market creates an impulse to the upside, then the market starts a very corrective movement to the downside with a lot of sideways price action, a lot of manipulations. Then the market starts a huge impulse to the upside, and then after the impulse the market starts to decelerate, creating again a lot of wicks, a lot of manipulations, and after a clear sideways movement the market starts a clear drop to the downside. Now you might be asking yourself why the market moves exactly in this way, and the answer is actually quite simple. What happens inside of this area is that hedge funds add a lot of long positions. Basically, the real movers of the market, institutions, inside of this area, they are adding a lot of long positions. And they need a long time to accumulate all these long positions. So this is an accumulation phase. And what they do is they generate the liquidity to actually buy and accumulate all those long positions by trapping other traders in shorts. So they accumulate all their long positions. Then the market starts a huge move to the upside fueled by all these longs. And then what the market does here, it creates a distribution phase in which they are actually taking their profits on all the longs that they have been riding on all this move to the upside. And this is exactly the price action that we have already seen lately with Euro USD. So let's go and analyze this price action, see exactly how this cycle happened, and we can clearly see their orders reflected in the commitment of traders. So we can clearly see where they were accumulating, where they were distributing, and I will show you exactly how this works. And by the way, I will do it in a smarter way because I will use the version of the COT data that I have directly on chart so that I can easily explain to you on chart what was happening. So let's delete everything and let me explain the phases that the market has been creating here on Euro USD. Now, let me immediately show you what happened here. We had the huge move to the upside, the first impulse. Then we had a clear accumulation phase inside of here with a lot of sideways price action, a lot of fake moves. Then the market started a huge move to the upside. Then we had clear deceleration, again sideways movement, and then the market started to drop to the downside because hedge funds were clearly closing their long positions inside of this area. So I will now show you how they were accumulating and how they were closing their longs inside of this position before the move to the downside. And by the way, yes, when the market was here, we expected the move to the downside, and when the market was here, we did expect the move to the upside. And I will link in description the previous analysis in which I explain all the reasons for which from here I wanted to see the retracement exactly to this area for the creation of the accumulation phase. Again, the analysis in which I explain all the reasons for which from here I wanted to see the market create this move to the upside for the continuation since the accumulation was happening. And then when the market was here, after the drop and the closing of the long positions, why I wanted to see the retracement exactly to this area. I will link all this previous analysis in description, obviously before the moves happened, so you can go and check it out for further reference and more free education. Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to analyze or cover in the next videos. However, let's get back on track and understand exactly what happened inside of this area. Let's go and grab our COT data. Now, when it comes to the euro, what you have to know, and actually when it comes to all currencies, what you need to know is that they are all traded against the USD on the spot all currencies are traded against the USD. So if you check the data for the euro, what you are actually checking is euro USD. And what we could see is that clearly what was happening is a huge accumulation of longs. In fact, we were going from having negative net positioning, massive negative net positioning with minus 114K net positions with 271K shorts and 157K longs, to a situation where the net positioning was becoming more positive and more positive. So after they moved to the upside, what was happening inside of this area is that clearly longs were getting added, as you can see here, from 147 all the way up to 184, all the way up to reaching 266K long positions. So a massive amount of longs that were fueling this huge move to the upside. And if you see that happening, and at the same time, a lot of shorts getting closed, going from 271K all the way down to less than 100K, you definitely do expect a move to the upside, because if institutions are so interested in closing their shorts and opening massive longs, you definitely do expect the move to the upside. And after that, what started happening? When the market had completed the move to the upside and they had actually profited on all their longs, what started to happening is all this sideways price action. Now, what this sideways price action is meant to do is it is meant to bring traders, trap traders in longs. A lot of people, after they see such huge spikes to the upside, what people will start doing is that they will start adding more longs. For example, I'm sure that a lot of people, once they have seen the market break above this high with this move here, they thought that the market had just created a fake breakout, actually a breakout, and started to long. But what happened? This was actually a fake breakout, so they lost their positions. Then again, the market created another higher high, breaking above this high. I'm sure that a lot of people started longing when the market broke above this high. And what hedge funds did? They needed exactly that. They had brought the market price at that level on purpose to bring all those people in longs. Why do they need to bring all these people in fake positions? Why do they have to make all these people lose? Because if people start buying when the market breaks these highs, they can actually sell. And why they need to sell? Because they had added massive long positions. We went from 147K all the way up to 266K. So they needed, after having such massive longs, they needed to close their longs. And in fact, that is exactly what we were seeing reflected in the COT data. Inside of this area, with all these manipulations, what we could see is that they were closing massive longs. They first closed 6.8K long positions, then they closed another 11K long positions, then they closed another 2K long positions, then they closed another 17K long positions, then they closed another 5K long positions, and with the last report, they closed another 10K long positions. So during this move, they were clearly closing massive longs, from which we definitely expected a drop to finally happen. And that is exactly what the market did. And that is how accumulation and distribution works in the market. They will first fake all people in short positions, for example, as they did here with this break to the downside. Many people for sure started shorting. And that is exactly what they need to buy. And as I said earlier, the previous analysis in which I explained all the reasons for which from here I expected this buying and we were looking for the move to the upside with students, you find it linked in the description. And that is in fact exactly what the market did, because we had seen that clearly reflected in the price action. And then here clearly we expected, after all this move, clearly to see a nice move to the downside, which again is exactly what the market did. And the market had also created a bullish pattern from which we expected this move to the upside, which as well is linked in the description. So I hope that you understood what it means, accumulation and distribution, and how it is actually played out by market makers and how you can track their orders. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find it linked in the description. You first learn all the rules of my rule-based strategies in the program, and then you trade them live with me. In fact, every single day you get a new daily market breakdown showing you exactly how to apply the strategies with entry, stops, take profits, as well as having me answering every single question that you have every day, including the weekends. So I really suggest you go and check it out. The link is in the description, and I will see you in.